Hello traders, Gary Wagner here. Just before 12 noon in Honolulu, 5 o'clock in New York. It is Monday, 13th day of January, 2020, and this is the daily report for gold and silver. We did have the Safe Haven Asset Group close sharply lower on the day today. This in response to a couple of things. First of all, a de-escalation and fear of escalation between Iran and the United States. That sort of was done last week. We also have the trade agreement, phase one, being signed on Wednesday of this week. And those two things collectively have really set the equities markets on a continued rally mode and altogether have brought down the precious metals. We do have some technical indicators that are suggesting that we've entered a protracted corrective phase, a ABC type correction, which we'll talk about when we pull up our technical studies. But first, to the price board. Traders, a relatively strong sell-off today, a continuation of what we saw on Wednesday and Thursday of last week, with gold futures currently down $11.80 at $1,548.30. It's a net decline of just under 0.8%. Silver also trading lower on the day, giving up 13 cents, and that closed at $17.97.5. Platinum closed lower on the day, giving up approximately $6, $980.30, and the lone star was palladium, up $11.10 at $2,084. Let's take a look at our technical studies. Interesting market action, and most importantly, what we want to determine is if what we are witnessing are the beginnings of a substantial correction, some sort of an ABC correction. Because as you can see, Wednesday's high at $613 really came within about $20 of the projected high of the end of or conclusion of the fifth wave. Now, when we consider that this market really started running up at about 1250, then went sideways for a while right in here before at the end of December really spiking and spiking higher up to the highs achieved last week, we certainly could be looking at some sort of an A, B, C correction. Another technical indicator that points to that distinct possibility is the identification of bearish engulfing patterns, simple two-day patterns. Now we've had two occurrences over the last 5 trading days. That's this red candle here and green candle. That was the first one. And then, of course, today and Friday marked the second one. That would really be confirmed if, in fact, we saw a continuation tomorrow, meaning another red candle with a lower low and a lower high. That being said, where can we expect this market to go and how could it trade over the next couple of weeks? And the simplest way to plot a possible correction is to take a look at the wave up itself, then take a look at the retracements. And since we have broken past the 38% retracement today, that came, of course, in at 1551. Market is currently at 48. The next two levels we would want to look at is the 50% retracement at $1,531 and the 0.618% Fibonacci retracement level at $1,512. If the market does continue lower and it finds some support at $1,531, in other words, the 50% retracement, we would expect it to go into some kind of a B wave. And the easiest way to calculate that is typically the B wave comes in at approximately 75% of the A wave that we have just seen. And to calculate where that would take pricing on this counter wave, the B wave down, simply what we do is first define the area that we have seen the market move, which is from 1613 to 1531. It's about $82. And then look at a 75% move of that. And that would take market forces up to about 1592, that would be right here. A logical move, if that was the case, that you would have one final C wave, which would actually take you to the 0.618% retracement. And that is one possible outcome in terms of how this retracement could unwind over the next couple of weeks. We'll take a look at various different models throughout this week, but for right now, my recommendation is to maintain your current neutral stance. To see if we get a continuation of this, we can look to buy the B wave. We can also look to sell the final C wave. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.